Unfiltered opinions.
Introduce me.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Hi, I'm Shaun. Please catch up on the live stream of Market Matters with Simon Brown and Jimmy. And please enjoy the rest of the show. This week we're diving into the world of credit scores. We're looking at how to manage your credit score, understanding your credit score, and most importantly, if we can help you improve your credit score, then we've done something a little bit better. We're going to kick things off with something that we found on X. So someone went on an ice cream date after work. Yes. And on the ice cream date, the gentleman asks the lady, "What is your credit score? Have you looked at your credit score?" Doesn't stop there. Goes on to take out his phone and show her his credit score. And she's sitting there wondering to herself, is this what things have come to?
Was this a first date? This seems like...
This is a first date,
you
it
would think
seems.
an ice cream date would be casual.
Yes. No, but I need to know about your credit score. I need
first date.
to know what
Wanna
I'm
have
getting
it
into.
over ice cream.
I need to know what I'm getting into. Very interesting times. You were in Bella Bella over the last weekend. Did anyone ask you for your credit score there?
No,
No.
not one time. I didn't buy ice cream, though. I did buy other stuff, but not ice cream.
Well, we got bagels. So we tried bagels this morning. You can see the bagels in the shot. I didn't get asked for a credit score for the bagels, but I suppose each to their own. Anyone that wants to know these questions. These are important questions, though, right? So I don't blame the person for having this conversation. I think very awkwardly timed. I would have waited a few dates, maybe a few months, maybe just get to know someone's last name first before you kind of ask their credit score. It's a deeply personal thing, but it's also a fundamentally important thing that we need to be having a conversation about, because at the end of the day, whether we like it or not, the credit score affects how the working class is viewed in the eyes of the lender. And I say working class because, not to say that other people that are perhaps on the upper end or on the lower end of the working class spectrum, their credit scores don't really matter, but the bulk of the taxpayer is the working class. Mm-hmm. And when you are at a certain tax bracket and you're earning certain salaries that we've spoken about on the show before, then a credit score doesn't really matter to you. But to you and I, that get up, go sit in traffic every morning to get to an office, to get to a location, to go do everyday work, that don't have the luxury of private chauffeurs, that don't have the luxury of not having to worry about the credit score. This is a fundamentally important thing. And we're going to try and help everybody unpack that. I mean, it's one of these concepts that you have to understand, whether you're old, young, married, unmarried, planning to get married, have kids, no kids. It affects everybody, right? And I guess the starting point is at the very, very beginning is, what is it, how it's determined, and who decides on it?
So who decides is credit bureaus, and then occasionally they get hacked, and then all sorts of chaos goes stuff.
So the likes of Experian, TransUnion, XDS, credit bureaus.
Yeah. So what they do is they collate all of your data about you in terms of what loans you've got, and they get it. So there's a symbiotic relationship where if I'm a bank and I'm a lender, I can query these credit bureaus, and I also send the credit bureaus information. And to be clear, it's not anonymized. It has to be, this is Simon Brown, etc. And it tells you what debt you've got, what financial judgments you've got against your name, whether you're paying on time, whether you pay late, your credit utilization. I always get knocked on my score on mine because I don't utilize enough of the credit. And they then sort of create a profile. And the purpose behind this is so that when you go and try and get a home loan or a car or an Edgar's account, they can get an idea of your credit worthiness. How likely are you to pay back this money? The more likely you are, the better deal you get, the more likely they are to lend you money. If you've got a bad score and it says, this Oak or Oak 8 has never paid back their money every time they take a loan, that's useful information for lenders.
And when we look at that as well, I mean, from a lending perspective, it might not matter for certain things. It might not matter if Jimmy and Sai borrow 100 Rand from each other, that sort of thing. But when we look at big ticket items, which everybody looks at, when you look at a car, when you look at a house, when you look at any significant debt that is probably beyond 100 Rand really at this point, it does factor in. It factors in on things like clothing accounts as well, but that's always a good starting point, right? So I remember kind of coming into the working world, and the first thing was get yourself an account. Get yourself a clothing account, even if you don't use it that much, even if you don't need it and all of that. Get it so that you can start building the credit profile.
Yeah.
And that's important because I want to look at, before we get into the payment histories and all of that, I want to look at length of credit history, because the longer you've been an active kind of person to be monitored, the more beneficial that becomes for you. And a lot of the conversations that we have, and we'll look at this in the improvement side of it as well, length of credit history affects your improvements as well.
Yeah, it all does, and it all fits in together, and ultimately they give you a score, and depending on the different ones give you different scores. What's your score?
My score, I think the scores range between 350 and 800. And I think the last time I had a look at my score, I check it periodically, not every single time, but the last time I had a look at it, we were around the 650 mark-ish. I haven't taken a look in a while.
So I just checked mine. I can do it on my app. Their score only goes up to 743. So that's it. There is different top levels.
Yes. Depending on which credit company you're looking at.
Just for the record, my bank says I am exceptional.
Well done.
674 points of exceptional.
There we go.
So but it is the duration of it. However, to your point that the folks go and say, get a store card or something, make sure you pay it off. There's also, if you've got insurance, I mean, anything that is pinging your bank account. So your insurance, which you pay regardless, because that's not a voluntary. They reach in and take it. Well, you might not have money in the account, but that goes towards it.
They still reach in though.
They try. Your telco, if you have a contract, all of those build your credit score. What they want to know is that when they reach in on the certain date to get X amount of money, that you will be good for it. And small things. I mean, when we were renting a flat, and for the flat rental, they wanted to do a credit score. Companies will want to do it before they employ you because it gives you insights into people. If your credit score is 2, no bank's going to employ you. They're not going to let you work with money if you've got no credit score. You're going to get, you're a risky individual.
The other thing is credit scores have become more and more interesting over time, to the extent that governments have been thinking about using them in electoral polling, in voting, in all sorts of things. And that's another conversation. I mean, from a political point of view, that's got many strings and layers to it as to why governments would want to do that, and why the political sphere wants to know the credit worthiness of its voters. At the end of the day, your role as an elected official is to represent your constituencies and represent your voters regardless of what their credit score is. But that's a conversation for another day. I want to look at the payment side of it. We spoke about this. We touched on some of the factors, and payments being some of the factors that can affect your credit score. I want to look at some of the negative things and close the conversation off with positive things. Negative things that can impact your credit score. Missing payments, like you said. Missing payments is something that comes up quite often, and even if you miss 1 month, and I think for some credit bureaus, it can take up to 24 months for a missed payment to drop off from your credit profile. So when you miss a payment, it's almost like a black dot against your name, and then it takes a while for that to kind of disappear and roll off your profile. That's the one thing that can affect your profile. The other one is credit utilization. Now, Sai has got a very privileged position that he's in, and that's why the bank calls him exceptional, that he's underutilizing his credit. But for many people, what people don't know is that the moment you go beyond 50% of the utilization, in most cases, it can vary from creditor to creditor, but the kind of the median is that 50-point mark. When you're using more than 50% of your credit card, more than 50% of your Edgar's account, more than 50% of any of your accounts, it negatively impacts your credit profile.
Yeah, and if you're using 0, it does too. Because it goes to the point that, a credit card, and I know, how do we use a credit card? Bang it out. and then pay it off and bang it out. And that's not what it's meant to be for you. To like use a little, and then, which is weird because
Then why give me the credit
why
card,
give
right?
me the credit?
Absolutely. No, that makes a lot
The
of sense.
utilization. So it's non-payment. It's utilization. They want to see that you're managing it well, because really, as we said up front, this is around how they're going to decide many things. What you earn is also important. What you own is important. But this gives you a pattern of your ability to pay it and to be respectful of the contract, in essence, which is the debt contract. It's also too many accounts. Not enough accounts are both red flags as well. If you've only got like one MTN contract and that's it, and they're like, well, like,
why don't you have other credit? What's happening? Yeah, so it's a weird thing in South Africa because you can't have too much debt,
Correct.
but you also can't have too little debt
yeah.
because then they don't know if you can carry debt,
Yeah.
regardless of what's happening in your financial situation. And we've gotten varying views on this, but the crux of the matter is, as long as you are looking at your credit score and looking to improve that credit score, you're going to unfortunately have to play by the bank's rules and the credit provider's rules. So whether you like it or not, whether you agree with it or not, the system is not going to suddenly change because you and I have a personal view on it. It is the way it is, and the best thing you can do for yourself, for those around you, is to work within the system. Yes. If you know the system requires these things, tick them as a tick box exercise. Your credit score goes up, it looks fantastic, and you kind of get what you want out of it. It serves its purpose. To that extent, I know people that kind of take the approach of saying every month a salary comes in and they throw the salary onto the credit card. It bumps up as it appears as a big payment, and it feels like manipulating the system. But as we said, the system is not going to change. Do whatever you have to.
Do what you have to. Understand how it works. And it comes back to, weird for a first date, but you need to know what your score is. And my little bank here has given me 4 tips on how I can improve my score and become more exceptional, I suppose. I don't know. I mean, I'm loving the exceptional part.
Yeah.
And there are things that you can do. Now, go and get your reports. Importantly, don't pay for a report. Like, there are 100 places you can get it for free. And careful when you log in, man, because they try and sell you stuff. Now, I think
they try and sell you stuff.
I think all the banks these days probably offer some type of credit score within their apps and online banking, so you don't need to.
We hope they would do that.
Yeah,
as those that are going to be giving out the money, you hope that they do that. I want to look at something before we jump to the improvements and the suggestions. I want to look at one last thing that can impact your credit profile, and that is what they call hard and soft inquiries. So every time you go out and apply for new credit,
it gets recorded.
The inquiry itself, whether you take that credit on board or not, that inquiry gets logged. Now, the difference between hard and soft inquiries depend on what it is that you are going to inquire about. So, for example, something like So soft inquiries typically don't affect your credit score. And what soft inquiries are is when you consent to a credit check, for example, for a new job that you're applying for. That's not you applying for a new piece of credit. That is you granting anyone else, a prospective employer, the permission to go and look at your credit profile. They might not get an idea of exactly what your credit score is because it's a soft inquiry, but it is giving them access to that. And that kind of inquiry doesn't negatively impact you, but the hard inquiries do. The hard inquiries are when you apply for credit, and that has a bearing. So if you go out and you apply to MFC, West Bank, someone financial services to apply for a vehicle. Those are hard inquiries from a vehicle perspective. And if you do more than one, more than two, more than three, each one of those is a separate inquiry, and therefore each one of those can affect your credit profile. I think with vehicles, they allow up to 2 or 3 hard inquiries before it starts to negatively impact. So let's say, for example, you're comparing 3 vehicles.
Because you would be potentially...
You're allowed to compare,
Sure.
right? So if I go out and I'm looking at buying the 3 German cars, a BMW, a Mercedes, and an Audi, right? And I go and put forward 3 different applications to 3 different dealerships. That's okay. The moment I go into a 4th one, then it starts to affect. And again, we don't know these things. We don't know those golden numbers. You only know these things as you find out the process. But keep in mind, hard inquiries have a bearing. Hard inquiries are quite important. And they also take a while to come off.
They take a while to come off. And the key point there is, I mean, in your case, you're making sense, right? You were looking at 3 different cars. I would have gone Italian, not German, but nonetheless. Are there 3 Italian cars?
Ferrari, Ferrari, Ferrari?
Fiat.
Well, you're exceptional in your exceptional case.
So absolutely. But were they also looking at, you've made 10. Why didn't you get a vehicle? Like what's... And
That's it. Also with the loan side of it as well, as you say. So even if you don't intend on taking the loans or intend on taking whatever credit is being offered, avoid doing too many inquiries. And when you do take credit, the other part of it is when do you take it? So something I found recently was they say don't take on new debt just before you're looking to take on big debt. So if you're looking to buy a house, for example, don't suddenly go out and get a credit card or a personal loan or a car loan or whatever. I think it's in the 3 months or so before you're looking to take on that big debt, because it takes a while for your new debt to then work into the system, because they have to monitor how you pay that new debt.
Okay, I did not know that either. Yeah, and it's this. I mean, it's go and find out what your credit score is. Find out how you can influence it positively and what might be negatively influencing it, but be in control of it. And back to the person on the date, it's not unreasonable on a first date, but it's not, it tells you something about a person. If I say, what's your credit score? And you're like, what is that? It's like, well, okay, this gives me some information here. Now, you still might want to, but it does tell you stuff that some folks are more in tune with their finances, some aren't. And we have access. Just 10 years ago, it was almost impossible to get your credit scores. Now we can. Now we can go and see what's driving it lower or higher, as the case may be.
Let's look at how to improve it. Let's wrap things up with how to improve your credit score, because that is very, very important, right? So I want to start by looking at some of the easy things, the easy wins, like the utilization. Keeping utilization under 50%, regardless of what and that's difficult to do because sometimes you have pressing needs that kind of push you over that 50% level. We're all human, life happens and that sort of thing. So one of the easy ones is monitoring the utilization, right? As much as possible, keeping it under, but keeping an eye on it, because having it front of mind means you're consciously trying to better it.
Yeah.
That's an easy one. What's another one?
Pay on time. Have the money. Every time the money comes in, have the money. If you don't have it, contact the person you owe. Don't go hide, because that'll get onto there as well. In other words, engage with someone if you can't afford to pay them. But have the money. Make sure that you can make the payments. Don't have hundreds of accounts and every single store in Rosebank Mall. Be selective where you have accounts at certain stores. Store accounts, they have their uses, but not every single store.
That's interesting, right? That's another one that I find interesting is go for the other options. South Africa now has new options. Guys like Payflex, where I can take something, and this is something you also kind of see in the likes of Foschini, right? Where this is where it comes to you having conversations. Foschini have the option to, and Foschini's the TFG group, obviously. They have the option to pay over 12 months with interest or over 6 months interest-free. Now, yes, over 6 months interest-free, you're going to pay a higher premium on a monthly basis because that debt is interest-free. But the likes of Payflex as well, right? Those kinds of places. Payflex is not a store account. But what it does allow you to do is it allows you to split your payments over a period of time without incurring debts and incurring heavy amounts. So take, for example, let's say you want to buy a laptop. Let's say this laptop's going to cost you 10,000 Rand over an upfront fee of 10,000 Rand, or you can split it over 4 monthly payments at 2,500 Rand each. Now, instead of going out and getting a loan for the 10,000 Rand to purchase the laptop, take the option like Payflex, where you're not negatively impacting your credit score.
So, because fun fact, they don't report to the credit bureaus. All those buy now, pay laters.
That's it, right? But use that very, very carefully, folks, because the moment you go down that rabbit hole, when you go beyond those monthly payments that are stipulated, you start to incur interest. And
then it does get quite ugly. So they work. I got a friend, and she was looking to buy a washing machine, but the one she could afford wasn't very good. The one that she wanted was expensive, so she did a buy now, pay later. And it's perfectly, she's got a job, she can afford, I think she did it over 3 payments. It's interest free. It's perfect.
And that's the thing, right? Yeah. So those sorts of easy wins there, low-hanging fruit that you can implement on a daily basis, that you can kind of manage for yourself.
Yeah.
At the end of the day, it comes back to what we said around the system. It's there. If you can find and understand how the system works, it's not manipulating the system. It's operating within the bounds of the system, managing it responsibly, and that's it. I think a final parting thought around the improvements side of it and a conversation around the improvement side of it is looking at things around the length and the history. And we spoke about this at the start of the conversation.
Yeah.
I said we'd circle back to it here. For some people, the question has been asked, is it better to pay down and remove something from my credit profile entirely, or to leave it on there? And that's quite an interesting thing as well, because when credit bureaus put together the score, they measure how long you've had a credit history. So say, for example, you've had a Markham or a Edgar's account for the last 15 years, and you finally got that account to a point where you can pay it up at 0 and close that account. I, for one, don't think it's beneficial that you close it, because when you close it and it eventually drops off your profile,
You lose all that.
you lose 11 years or 15 years of history.
As long as you've been paying it well, and as long as
That's
it's interest free.
So if you've been paying something exceptionally well, you've got the utilization rate down, you're managing that debt, you're not leaning into it as much, and you're able to get it down to a comfortable below 50% utilization and all of that, paying it up might not necessarily be in your best interest.
Yeah, I hear you 100%. Watch out for, there might be an admin fee or something.
Yes, of course, of course.
Assuming all things equal, keep running it.
And that admin fee as well. I mean, if you look at that admin fee, it could be 50 Rand or so relative to whatever. And then you can look at it as a 50 Rand for keeping that credit thing active rather than an admin fee. And that could be a good thing for you. So that could be something very beneficial as well. And if you have other things on your credit profile that perhaps something happened in the past, you had judgments or defaults or conversations where you've had to make payment arrangements and you've cleared that, make sure that that comes off your profile.
So that's the other reason why you want to check your credit rating.
On a regular basis.
To make sure that it's correct and that things have come off, so judgments 5 years, etc. Those need, and you might see, I've got a Vodacom contract. No, I don't have a Vodacom contract. What? It's been misallocated.
Yes, and especially with the increase in things like identity theft and all of that, where people are able to open up accounts and things in your name. Make sure you're on top of your credit profile and you check these things. And if you have, for example, fallen behind on payments, catch up on those payments, bring them up to date, because yes, it might be painful, but in the long run, that does improve how you are scored and how that scoring system works.
Yeah.
At the end of the day, it's about the score, isn't it?
It's about the score, and being informed and knowledgeable is what matters.
Maintain the score, know how to get the best out of that score, extract all of the value that you absolutely can, and hopefully that can help us all in this credit journey. I mean, at the end of the day, we do what we can, and the credit score is almost, for some, it would be considered a financial passport of sorts, where things are monitored, whether you're a good or a bad person, based on a set of numbers and data that affects your life or that directly relates to your life. And unfortunately, we can't do anything about it. But we're going to leave the deep dive on that note. Before we go, if there are comments around the credit scores, if there are questions, we'd love to hear them. We'd love to get your experiences around the credit journeys. Everybody goes through a different credit journey at different times. Maybe you found ways to recover recover or improve a credit score quicker, we'd love to hear that. We'd love for you to share that within our community so that we can help each other better improve these things, because at the end of the day, the numbers aren't going to go away. They're always going to be a part of our lives until the government decides to change that, which doesn't seem like it's a conversation they're even having at the moment. But yes, for as long as we have this, let's make the most of it and let's see how we navigate it. We'll leave the deep dive on that note. And we wrap things up with Investor Insights. We are taking a look at companies that are doing things. We're taking a look at some of the companies we spoke about in Market Matters. If you've missed that, go check it out on our live stream tab on our YouTube page. We're going to be diving into something that we saw recently around MultiChoice. They've adjusted their pricing, and it seems that MultiChoice could potentially have finally learnt from some of their mistakes in the past around pricing. But I don't know if the learnings have translated all the way through. I mean, MultiChoice as a business has been... I remember doing a conversation with... I think it was the Tech Cabal. They asked me for my thoughts around this. And I remember having a chat with another tech specialist, Mudiwa Gavaza, a very good friend of ours. He's been on the show before. He loves tech. He looks at all tech for us. And we had the same kind of conversation around DSTV and the MultiChoice business, aside from the Canal Plus acquisition. And it was to say that MultiChoice and DSTV have enjoyed a monopoly. And you've taken advantage of enjoying that monopoly. And consumers are now waking up to the fact that they can find alternatives. And it's been disastrous for your business. When you look at what's happened from subscriber volumes coming down to people now saying, we're just not going to do this. There was a time where I genuinely thought MultiChoice wasn't listening to its customer.
I think it wasn't. And it was, they had you, I mean, if you go back far enough, you were completely locked in, right? It was that or free to air SABC. There was,
you didn't have too many options.
You didn't have much in the option space. And they weren't. They were ruthless with prices, repeats, and et cetera, et cetera. But they had you. And then the angle became, well, they've got you in the sport. They started bringing in cheap deals around about 2010-ish, maybe 09. Sort of you could get the compact and the like and the much cheaper platforms.
But even then, they still enjoyed a monopoly because there was very little competition.
Yeah.
And fast forward to where we are today, we have the likes of Netflix in, we have the likes of ESPN, Disney Plus. Everybody's coming in. Everybody's coming in from a streaming perspective, and now you're waking up to a very different consumer who's saying, I refuse to pay for repeats anymore.
Yeah, no, absolutely. And a consumer who's saying, in case of streaming, so we have only one at a time going, and then when we're not, when you want to close that one, move to another one. It's the ease of being able to do it. And they haven't innovated. I give you an example. Rugby World Cup and Olympics last year. I would have paid, I don't know, what, $1,000 if they gave me a pass to watch all the rugby or the Olympics, $1,000 each. Do they? No. I watch F1. I'm an F1 fan. I pay, I think, $60 a year, and I get it on all the different platforms. Driving back from Bella Bella yesterday, my wife's driving. I'm watching the Chinese Grand Prix.
Where? So I ask where because I grew up on F1 with my father. He's a huge F1 fan as well. And I've always found that certain sports are difficult because Supersport has a lock on that as well, right?
Just go to f1.com.
And just pay for that subscription.
Yeah, so it used to be that you couldn't, and it was limited because, of course, they had sold rights to MultiChoice. That contract, I get everything. And they've now introduced a higher tier package. I'm not sure, but the races and Alice and and I've got it across multiple devices. I've got a Chromecast 4K, so it runs on my TV. I've got it on my phone. I've got it on my iPad, and it's that sort of thing. There's going to be a time when I can pay a Springbok pass, right? Where I pay whatever per season, and I get all the Springbok games and all the other bits and discounts to tickets, because that's what this whole F1 app is doing. They're trying to sell me tickets for the next Grand Prix and et cetera, et cetera.
And you know what? For me, that is the evolution of broadcasting, right? So I had a conversation with the CEO of Supersport around how it is that as a broadcaster, you're making your money and all of those sorts of things. Now, Supersport has a very interesting value proposition, is that they've got quite a bit of a lock on the sporting world.
Yes.
in general. So they get the rights ahead of everybody else and say, we want the rights to this. And you know that you've got that intellectual property that you then leverage into a multi-choice, into an SABC, into whatever. But that's how you secure your spot in the value chain.
Yeah.
But as the consumer, I might only want one thing out of a package. I don't need to be paying 5,000 Rand for a DSTV package. It's not that expensive. I am exaggerating,
feels like
but
it.
it feels like it. But I don't need to be paying all of that much if I'm not going to be utilizing that from a value perspective. And I think consumers right now are looking for value. If you're offering me value,
That's actually a great
that's
point.
why I'm happy to pay 100 Rand for Netflix
Because
or whatever.
20 years ago, even 10, 15 years ago, 30 years ago, it was look at all what you've got, 100 plus channels. That was their marketing. And it was the quantum that we had that was, and now we're sort of like saying, 100 channels, but I watch 3 of them, folks. Like really 90. But of course, those 97 channels cost them collectively $2.50. And that's not where they're making the money. We want to watch a series, which the streaming services are on. Sign up for that one.
And that's the thing on that, right? So a lot of the conversation's now morphed into a streaming conversation, right? So if you think about your premium from a DSTV premium package perspective, it's now going to be sitting just under 1,000 Rand a month. For that 1,000 Rand, you could allocate a 200 Rand to a Disney Plus. You can allocate a 200 Rand to a Netflix. You can allocate a 200 Rand to an Amazon Prime. You can allocate a 200 Rand to an online F1 subscription. You get 4 different subscription services, far more variety, and you've gotten around the premium, the restrictions on the premium package.
But what you don't have there is sport.
That's true, but you're
that's
getting
the problem.
But what you're getting there is guys like Disney Plus that have ESPN rights can start to incorporate that.
Yes,
But
the
there's
sport will
also
come.
there's also nothing stopping a SuperSport from saying, hey, pay 200 Rand directly to SuperSport so you don't have to go through multi-choice to get access to our product. At some point, that's a conversation that surely happens at some point for consumers where SuperSport then sees and says, but we can if you've got a rev share agreement as a business, say we split the revenues 60-40 or whatever, and then you suddenly realize that actually I can get 100% of the revenues because this is what people actually want, and you just offer them what they want. I'm not saying that's what's going to happen, but that's the evolution of how we got to a Netflix, how we got to a Disney Plus, how we got to an Amazon.
It's how it's happening in the US, and you will see in the US. So, I mean, what's happened is their Comcast cable is like even more expensive than. I mean, I know peeps who are paying $200 for Comcast cable. Now that includes internet, but it's also their TV. And so you strip all that away, then you end up signing all these different bundles, and you're actually paying more. But what we are seeing is the different sports in America. What do they call it? Football, gridiron. That we had the basketball, the NBA, baseball. All of those sports are kind of siloing themselves and saying,
This
"You're
is a
super
base
fan,
sport."
This is
Yes.
where you come and do it. And yes, you've also then got ESPN, which is part of Disney, which is weirdly struggling a bit, not available locally. And I think the issue there is how the rights are sold off, how the global rights are sold. But it will go that way, and MultiChoice will go there, kicking and screaming, because they've run the numbers, and they know that person paying 1,000 Rand a month, if they let you pay just 200 for sport, there's 800 Rand that walks out the door.
Absolutely. But at the same time, you can't force the 800 Rand to stay there for the sake of not. So you have to then give them value for that 1,000 Rand, right? And that's your responsibility as a broadcaster. And on the streaming side of it, I mean, we've seen a lot of guys try the stream. We've seen the multi-choice business try the Showmax thing, launch a Showmax 2.0. They've now got Disney Stream as well, or DSTV Stream rather. And that is also now, again, it's not about just throwing streaming products at me. It's what value am I getting for those streaming products? Because if you're still charging me 800 Rand or 600 Rand for a stream account, or even 300 Rand for a stream account, and I'm getting no value out of it.
Yeah.
DSTV has quite a few challenges around locking different channels and all of those sorts of things, and the repeats and all of that. But the consumer is very clear now about what they want.
Yes.
And the guys that are producing the content are even clearer. So certain content and I saw this, Amazon went and paid for the rights to the Bond franchise. Now you know that
Yeah.
all of the Bond movies are going to be found only on an Amazon platform. When Disney went and took all of their content off of Netflix, they were willing to pay that clause to release their content out of Netflix, that settlement agreement. It was in the billions. And this is what the content creators and producers are realizing, that if we control our content, then if someone wants our content, they have to come to us. So if that is the way that the content management side of it is going to go, then what is your value add to the consumer? Because that's what I'm paying for, right? As the consumer, from a streaming side, from a whatever consumption it is, I want to consume things, and I now know that I have the flexibility to consume things my way. You're not going to force me to consume things that I didn't want to consume in the past.
Yeah.
And if you don't adapt your business model,
You're dead. And I just searched ESPN in South Africa and on Perplexity, and they're telling me about VPNs. Like,
but so I'm not even concerned about that, because that's a flick of a switch, right? For
that's
someone
just
like
it.
a Disney Plus to come back and say, "Oh, you guys want this? Here you go."
yeah, it is going to happen. This isn't.
It's not dev work that goes into it. It's not infrastructure
But I
development.
tell you what, my best $79 a month is Google Premium.
Google Premium.
Take the
What is
advert-
that?
Takes the adverts away. And
Oh.
so YouTube Premium.
YouTube Premium. Okay.
takes the adverts away.
Okay.
You.
You don't like adverts.
Yeah, there's the YouTube advert. It's what my wife and I watch probably most.
Yes.
Is YouTube on big screen. We've got the Chromecast 4K, and we're watching on big screen, and take the adverts away.
Folks, let us know what your most expensive premium is, what your most expensive subscription is, and what your happiest subscription is. The one subscription you will pay no matter what it costs, because you get exceptional value out of it, or just because you like what it is that they offer. We'd love to hear that. Let us know, engage, pop it into the comment sections of our videos, send us mails. We definitely want to know your experiences from a streaming perspective, and what you're happy to pay for. So that's going to be our streaming chat. I mean, that's going to be where we're going to leave the streaming conversation. We're going to update our wall, because there's a couple of things we want to be looking at from that perspective. You might see us add some things, take some things off. We're still in two minds around what's happening with our wall. We know we haven't been putting it out in the public domain, and that's because a lot of the conversations that we've been getting from our community has been to say that the wall is a lot of value. You guys really like the wall, and we thought maybe we would have that wall be something special for you guys. So we're looking to see if we can make it even more special for our community, for those that have been with us for the longest time, and we appreciate you guys. I want to look at the AI conversation, because we had that conversation. We have to be having AI on the wall at some point. Do we then, how do we approach that? Do you go AI stocks or companies investing in AI? Do you go NVIDIA? Where along the value chain do you go? Because guys, and we've spoken about this, guys like Facebook or guys like Meta and all of those other platforms are putting their R&D budgets into buying the chips to develop their own AIs. But at the same time, a Copilot, a Grok, a ChatGPT are three different companies. Do you invest in the company that's got the best AI? I'd happen to think not, because all AIs have different uses. And I happen to think you go all the way back to someone like a Taiwan Semiconductor or an ASML that you mentioned last week, to say those guys supply all of them.
And they winner agnostic. So even right at the base, it's ASML, because they make the kit that makes the chips. Then you've got the chip maker, which is at the Taiwan Semiconductor Manufacturing Company,
and NVIDIA.
And then the step up is NVIDIA. So NVIDIA designs, and then they make them here. So NVIDIA, and you could perhaps to a degree bring ARM and others in. I'm not sure, but absolutely, I think that is the better space, because with Meta and Alphabet and Microsoft and all the others, and there are lots of them putting a lot of money into it, you've also got all the other stuff there. I mean, Meta,
subscriptions and this
and
and
Meta's
that.
making money from Facebook as an advertising
Facebook
company.
ads, yes.
Alphabet's largely an advertising company. And we've spoken before around how Facebook solved the Apple lockdown with AI. They did, but I don't know where the revenue is going to come from. And then Meta, open source, or Llama's open source anyway. So then it's the case of, well, I mean, is AI going to be big? Is it big? Is it around? 100%. How do we benefit? Well, go to a different part of the value chain.
Absolutely. So I happen to think from a value chain perspective, I don't really see a value in going to the end part of the value chain because everybody has a different use case. How does Microsoft quantify exactly how much money Copilot has made them since its introduction and how much it adds to the bottom line? Whereas if you go all the way back to an ASML, yes, you're increasing your concentration risk towards the AI sector, but that's the play that you're going for anyway.
But it's also, if AI ends up being not a hot thing somehow, that's fine because the Taiwan people make chips for
other
Apple
things as well.
And make no mistake, we are using more and more.
So the AI play is to definitely go as far back in the value chain or unlock those pockets in the value chain. And I think that's also the same with something like the mining space or any other space really that you look at, depending on what your level of concentration needs to be towards it.
Yeah.
So say, for example, you were looking at a Bitcoin kind of conversation. One person might say, I want direct exposure to Bitcoin, to the cryptocurrency, to the volatility that comes with that. Another person might say, I want to back blockchain technology in its advancements, not in its use case towards crypto, in its use case towards banking, CBDCs, everything else. And so you do a blockchain play, not necessarily a Bitcoin play. You know what I mean? So even with the AI, I completely agree with you. There's different areas of the value chain, but you and I are on the same side. It's the value chain that is agnostic of market noise.
Yeah, 100%. And it's also, as it evolves, those companies will evolve with it. There, if you saw Jensen Huang's speech last week at GDC from NVIDIA, and he's talking,
where he introduced the new computer or something.
Yeah, he's good. I mean, for him, AI is in the rearview mirror already. He's looking at new things, and the big one for him is autonomous driving, which is a lot of it is AI. But yeah,
and that's a new use case, right? But again,
correct.
that doesn't take away from the need for the chips, the manufacturing for the chips, the process behind that. It just adds a new use case to diversify revenues at the end side of it, but the core of where the value still sits from that perspective. So we're definitely going to add AI to our wall. We're definitely going to add the use cases and where we like AI to be. We're on the same page around that, and I think that's something else perhaps you guys can weigh in on as a community. Tell us where you are seeing AI going, what you are liking about AI, what areas of interest we might not have thought of, because there's new use cases like the autonomous vehicle side of it. There's new use cases that are coming up for AI. I, for one, happen to think medical. I was going to go with data, but take me through medical. No, medical's interesting. What's happening there?
So medical. So I mean, there are AI systems that can detect breast cancer in women with better efficiency and 6 months before doctors can. We don't know how it works. I mean, just stuff like that, solving for disease and all of that. I mean, you've got the sort of robotic medical companies already, which are quite fancily done, but the ability to for example take an R&D process, which is typically can take forever to do, and to throw it into a AI machine, not a large language model, probably a small language model, because you're going to refine what you want to use and let that run at it and come up with ideas. And that is going to be, I mean, we're going to see crazy stuff coming out of there.
No, and this is the thing. For me, artificial intelligence doesn't really stand for, or AI doesn't really stand for artificial intelligence. It's more around aggregation of information. Because you can aggregate information across any sector, across any industry, across any value chain, any use case. And it's about how you apply that information, like you said, in the detection of things like breast cancer, how you use that information. There's so much information out there. And I think the key role of AI is going to be in bringing all that information together and condensing it into a simple and easy thing to use. So there's lots of value from that perspective. There's lots of things that can be found in that space. And yes, we'd love to hear your thoughts around what you're thinking could be the future of where we go to from here. What else are we adding to the wall?
Momentum.
Oh, You and I spoke about momentum this morning.
This morning. Gent, yeah. I mean, we see lots of results.
We do.
We get jaded.
We
to
do.
them.
Results season is quite hectic for us, yeah.
And then momentum comes late in the season and says, everybody step aside, look what we have. Small
50%.
Little $1 billion rand buyback, 50% numbers everywhere, left, right, and center, and still trading 20+% discount to embedded value. Now, insurers are difficult to truly understand, and they carry risks for all those sorts of, things can go horribly wrong. But man, momentum.
Just to for those that haven't seen the momentum results, just to give you a bit of context around what's been happening there, they gave us a half-year update, and earnings were up 53%, headline earnings up 52%. I'm just going to run through some of these cliff notes here. Interim dividend per share up 42%, not just double-digit growth in terms of some of these metrics. Operating profit 33% up. This is double digits on another level, right? And as you said, buybacks announced, dividends announced. The business is not struggling. They are extremely cash generative. They are definitely jumping onto our wall. The question is, where do we put them on the wall? I want to see where they're trading at the moment.
32-ish. Embedded values 39-ish. I mean, small things like value of new business up 40%. Yeah. But the business margin goes up. I mean, it's just like everything about this was like, you know who's been on this stock for a long time? It's Keith McLaughlin.
Really?
He's long since liked
And we're approaching all-time, or at least the last 10 years highs. 2015 highs go quite far. 2015 highs are around, I think the highest we got to in 2015 was probably around 34 Rand 70 or so, and we're just under 33 Rand. So we're basically at 10-year highs on the stock, and it's very interesting that the performance has rebounded from pandemic lows of below 15 Rand to basically, if you'd gotten in the pandemic, you would have doubled your money by now.
Yeah. And we have to be clear, the billion share buyback is not the one that they did last year. It's
No.
the new one for this year.
It's the new one for the new half year.
Also true.
For now,
Also
because we don't know what they've announced for the full year. It's announced for the full year, but they could easily come back at the end of the year and say, hey, we did another buyback, or we approved another buyback. For a business to be cash generative and generate that much money, I absolutely agree. They get to make our wall. Hopefully, if you are looking at this, that we can see them break above these highs and see them go and do a lot better as a business. This is all-time highs for them. So beyond this is unknown territory, but we look forward to it because we like seeing our companies do exceptionally well wherever they can.
I'm wondering what the embedded value was back at those previous levels.
At 2015 levels.
Yeah.
That would be interesting to see.
I'm going to see if Perplexity can find it. What was Momentum Group embedded value in 2015? Let's see if Perplexity should be able to say to me. Yes, it gave me 2024. Yeah, you're just stupid. Oh, no, okay, my bad. June 15, it was 25 Rand. So it was trading at that point at a 40% premium to embedded value. It's now trading at a 20% discount to embedded value. Where do you want to be buying it?
There we go, right? So that's something that's going to make our wall. We're going to update the wall. We're going to move a couple of things around if we need to. We have liked a couple of things that we've needed to put on there. But we're going to leave the show on that note. Thanks, folks, for tuning in. If you've missed the conversations, you know exactly where to catch up on them. The live stream is updated separately, so it would have been uploaded before this. You know where to catch up on these episodes. And we're going to leave you, as we always do, with our unfiltered opinion of the week. We never leave you without one of those because we feel like it's important to your lives and it's important to our lives. This week's unfiltered opinion is courtesy of the beverage companies that we enjoy, the likes of Starbucks and Seattle and Kauai and all of those. And it's a very particular one. And people might not agree with this, but I think that our community and the vast majority of people around the world will agree with this. There is too much ice and too little everything else in cold beverages that are made by these companies. I am paying to get money or get value for my money, and I get a cup full of ice and that much of everything else. And you don't realize it. And this isn't limited to these beverage companies. It extends to the likes of the McDonald's that give you a fountain cold drinks and that have ice. Any closed cup that has ice in it with your beverage, you get less beverage. Companies out there, stop putting so much ice in things. If I wanted more ice, I'd get a separate cup of water and have that into the drink, right? That's my unfiltered opinion of the week. Too much ice, too little everything else. That's the show. Thanks for tuning in, folks. Investing isn't hard. Just try it.